Hey savers! Welcome back to Save It, where we make your money work harder. Today, we've got some huge, urgent news that's going to affect millions of you with student loans. And listen, I'm also a student on the SAVE plan, so I am right there with you on the same page. I'll be monitoring these updates hour by hour and following up with student loan advisors to bring you the clearest picture. Make sure you hit that subscribe button and turn on notifications so you don't miss a single update. Let's dive in. All right, let's get straight to it. The Trump administration's Education Department just dropped a bombshell. Starting August 1st, 2025, interest will resume accruing on federal student loans for nearly 8 million borrowers enrolled in the SAVE plan. Now, for the last year, many of you on SAVE have been in an interest-free forbearance, a pause on payments and interest while the SAVE plan faced legal challenges. The department claims this change is to comply with a court order that blocked the SAVE plan. But here's the kicker. Advocacy groups like the Student Borrower Protection Center, or SBPC, are loudly stating that no court order explicitly told the department to restart interest. They argue it's a discretionary policy choice by the administration. And for you, the borrower, it's going to hurt. The SBPC estimates the average SAVE borrower could be looking at over $300 a month in new interest charges, adding up to more than $3,500 a year. This means even if your payments are still technically paused for a little longer, your loan balance will start growing again. And here's another hard truth. The time you've spent in this forbearance, and any time moving forward, will not count towards your loan forgiveness progress for IDR or PSLF. Education Secretary Linda McMahon is urging SAVE borrowers to quickly transition to legally compliant repayment plans, like the Income-Based Repayment or IBR plan. She says that remaining in SAVE means you cannot access important loan benefits and cannot make progress toward loan discharge programs authorized by Congress. The department says they'll start direct outreach to SAVE borrowers on July 10th with instructions on how to switch plans. But here's where it gets complicated. We've been hearing about major operational challenges at the Department of Education. They've seen significant workforce reductions, leading to a massive backlog. As of April 30th, nearly 2 million income-driven repayment applications were still pending. While the department is now saying they expect quick and timely processing for those switching from SAVE, this backlog is a serious concern for borrowers trying to make a move before August 1st. And to add another layer to this, President Trump just signed a new tax and spending bill on July 4th that will drastically reshape your repayment options. This bill repeals several popular affordable repayment plans, including SAVE itself, along with PAYE and ICR. What does this mean? By July 2028, if you're on one of those plans, you'll be automatically enrolled into a new program called the Repayment Assistance Plan, or RAP, unless you proactively switch to IBR. And RAP is very different from SAVE. SAVE, payments based on discretionary income, often resulting in $0 payments for low-income borrowers. RAP, payments based on gross income and requires a minimum monthly payment of at least $10, even if you report no income. So if you're used to $0 payments, that's changing under RAP. While RAP does include some interest waivers to prevent balances from exploding if you make your payments and can apply some payment to principal, many borrowers could still face higher monthly bills than they did under SAVE. Also, forgiveness under RAP is generally after a longer 30 years of payments, and it's considered taxable income unlike PSLF. Please take a look at these numbers in the picture, since this will be the topic of the upcoming episode to explain the RAP plan in details. The information in this video is for educational and informational purposes only. While I'm sharing insights as a fellow student loan borrower and from monitoring official sources, this is not financial, legal, or tax advice. Student loan situations are highly individual, and what's right for one person might not be right for another. Always consult with a qualified financial advisor or a student loan professional who can assess your specific circumstances before making any decisions. I'm just here to help keep you informed. This is a lot to take in, but you're not powerless. Here's what you need to do right now. 1. Understand your options. The department is encouraging SAVE borrowers to switch to the Income-Based Repayment (IBR) plan. Use the Loan Simulator tool on studentaid.gov to compare what your payments might look like under IBR or other available IDR plans. 2. Act fast. With interest resuming August 1st and the application backlog, the sooner you act, the better. Don't wait for the department's outreach if you can explore options now. 3. Document everything. Keep records of all correspondence with your loan servicer and the Department of Education. This is crucial for navigating any potential issues. 4. Stay informed. Policies are changing rapidly. Subscribe to official updates from studentaid.gov and trustworthy financial news sources. And of course, keep watching Save It. This is a challenging time for student loan borrowers, especially those who relied on the benefits of the SAVE plan. But by staying informed and taking proactive steps, you can navigate these changes. What are your thoughts on these new student loan changes? Are you a SAVE borrower? Let us know in the comments below. If this video helped you understand what's going on, and make sure to share it with a friend who may benefit from it. Please give it a thumbs up and subscribe to Save It for more videos and updates regarding the changes and the new RAP plan. Until next time, stay smart and keep saving.